Hi guys, this is Simon with Trade and Perform Coaching, going over the trade review for the 8th of May 2014. So let's kind of jump into it quickly, and it's been a long day, and just kind of cover the highlights. So this morning I had mentioned, first of all, ES has been stronger than NQ, right? We've seen it the last couple days, particularly in the morning. It is getting responsive buyers almost every single morning, even if it eventually rolls to the downside. The initial move has been back up. So the first thing that I pointed out that we'd want to see in terms of are we getting a long side push or a downside push would be, well, first of all, do we maintain the uptrend from Wednesday afternoon? And of course in the morning I suggested everyone draw this trend line right up underneath, and we obviously did not break it to the downside, nor were we able to test Globex lows in after the market opened in ES. Additionally, NQ, if you look at NQ, was unable to break below its Globex lows, both signs of strength in the morning. Now, I had several reasons why I did not trade today, but I did mention and tried to strongly emphasize that the first of all, the strength has been particularly good in ES, that NQ has been weaker. Secondly, and importantly, right, was that we again had testimony from the Fed chairwoman, Janet Yellen, in the morning, and that for me, that pretty much put me on the sidelines until at least, even if I were to trade, at least till she's done speaking. Now, people ask me, why is it that you do that, right? So there's a couple of things. First of all, I don't need anything from the market. I really don't, not at this point in my career, besides good trade setups repeatedly, right? I'm looking to do now, and I've added a third recently, a couple of things to my trading outlook. First of all, I want to trade when there's very little chance of someone else taking my money, okay? I try to think of this as if I were a guerrilla fighter, right? And everyone's out to pretty much kill me. How is it that I can position myself to score a victory without exposing myself to defeat? So let me tell you, number one in that line of thinking is I don't trade when a single word from a single individual person can completely destroy my day, right? Maybe even my week if it's bad enough, okay? And I've been through enough markets going all the way back to the early 90s to see that has been done, right? And it happens on so few occasions. She doesn't give testimony every day, right? There's no pattern. I can't tell what the market's going to do when she testifies. Unlike when we had last summer, we had the thing with Syria. Every time news would come out, the market would tank. You could buy it, and it would run straight back up. It was great. It was a bonanza, right? You actually welcomed the news. It almost always came out at about 11 a.m. That's not the situation here, right? So, bottom line, I run my trading business like a trading business, which means I want as little exposure as possible when the environment has additional risk that I cannot account for or plan for. So that's number one. Number two, I called in the morning, if you look, I tweeted it almost right out of the gate, apparent open drive higher, right in here. Okay, so I had mentioned, what would cause me not to take a trade in this area? And the answer was open drive higher. And we got an open drive higher out of the gate. And obviously, there was no rotation here. There was no rotation down. There was no penetration to the downside, and there was no test of the Globex low. It just simply wasn't weak this morning, right? And it was tough because Janet Yellen started her testimony right at the open, okay? The other thing that I emphasize almost every single day, if you want to play contra on a open drive higher day, it's easier if you wait till after 9:30. 9:30 to 11 is the prime time to look for reversals, okay? This is characterized additionally by, if you look at the tick, was predominantly positive throughout the course of the morning. The counter rotations were incredibly small. In order to capture this 2 points right here, you had to do it almost perfectly. And then what I would put to you is, okay, so most of the traders I work with are retail traders with accounts anywhere from $5,000 to $10,000 accounts on the small side, right? And I have a few guys I work with that have $1 million accounts, right? But they're all in the same place, which is we all want to be compensated on a regular basis and on a daily basis. I do too, right? But if you're going to expose yourself to every single environment voluntarily, right, and you never give yourself permission not to participate in a market environment, you will always be a slave to what the market is doing, and you'll never be able to pick and choose. It's the only way I can put it. Furthermore, for the guys who got caught up, okay, the other thing that traders do quite often is they insist that the market follows some kind of pattern. Now, did I think once we got up to this 84 area that we were going to go ahead and try that 86 and then possibly 92? Yeah, I did. I don't have any problem saying that. We rejected out of this zone. It was appropriately placed zone, right? You can see, first time into the zone right here, we gained a 2-point rejection from 1880 down to 1878. You were able to garner 2 points. Was I right? Yeah. Was it still a good trade? I'm arguing not so much, right? With an open drive higher, prior to 9 a.m., usually you need the first hour to let it kind of work itself out. And it's a trading habit. It's not that it worked this time. The question is, will it work every single time? So just ask yourself, right? I'm not here to beat anybody up. I'm actually here to help people, right? For me, it wasn't, even outside of my own issue with my parents having passed last year, and this is not a good, couple of days for me to trade, right? I'm doing that voluntarily. There's nothing tremendously wrong. I'm not in a period of mourning. I'm just simply not exposing myself to a possible weakness that might clip me, right, and cause me to have what's already going to be a challenging weekend to be a terrible weekend, right? Who wants to lose money and then deal with that stuff? I don't. Okay. The next part of the equation is this, right? When you look, we weren't quite able to extend all the way back to this 1885 3/4. Okay. So normally, the reason why there was a single point right here was because normally the zone would have been 1884 to 1886, roughly. Okay. But what I've been trying to strive to do, and I might have to call an audible on it, might not work, right, is to avoid, I try to avoid having these zones sit right on top of each other because it creates frustration, understandably so, right? But when I make that compromise, if I decide to remove this area, right, I say, okay, if it stretches back here, okay, the reason why is I want everyone to consider this the back of a proverbial zone and target this area for short. What is the risk that I take with that? The risk I take with it is it'll never get there, right? So let me ask you this. If you were trading a large concentrated position and you had two choices, you could be overly aggressive and take the trade right here and possibly get squeezed back for 4 points before your stop work, right? And you're making a choice. Okay, remember you have a choice. Or you can be aggressive and simply take the front of the zone here, knowing that it's stacked right on top of this zone. And if you've seen trend days up, they work just like this, right? They can just keep going and grinding up against you, right? So given that environment, right, are you willing to wait and see if they give you a shot here? And if they give it to you here, right, you can enter with the minimum amount of risk. Or are you going to turn around and go, wow, I should have taken the trade at 1884, beat yourself up for not getting it, right? And then every time a zone gets to a point where, because this is all poorly auctioned all the way up here, every time we get to a point where aggression could be punished, you decide to take a trade. And so what ends up happening is psychologically you expose yourself to weakness. You expose yourself to constantly being scared that you're going to get run to the back for, and in my case, a 4-point stop from the front of the zone is the appropriate stop. Okay, it's 2 points behind the zone each and every time, right? What this puts me in is a no-win situation. So the way I resolve that, long story short, is I push to the back of the zone, I forget about the front of the zone, and if they let me get paid, that's great. And if they don't let me get paid, I'm cool with that too. Okay, because we had the inverse situation the other day, right? Where, and I'll show you where that paid dividends here. Let me show you this. And again, I don't trade the last hour for lots of really good reasons, okay? But the zone here normally would have been 1868 to 1870. It was an appropriate zone, okay? There was actually pretty decent, what I would have anticipated being relatively poorly auctioned area that would have completed at 1870, okay? But you'll see, we're in the last hour coming in, and we got a little bit of panic selling. These were all negative 1,000 ticks down here, okay? But if you took the trade at 1868 in the last hour, you just got tagged out with 2 points. You'll notice the crisper moves come in the morning, the more difficult moves come in the afternoon. So number one, I didn't want to have a front of the zone at 1870 that simply would have resulted in someone getting tagged out for 4 points. And when I say someone, I mean me, okay? Because I make these charts for myself. I'm simply sharing them with both my coaching clients and for people who want to learn, with the public in general, okay? And so I can tell you, if I'm going to lose money, the point at which I want to lose money, or I'm willing to lose money more appropriately, is always going to be where it's most difficult for someone to take it from me. So that automatically means that the last hour, I don't want to spend a lot of time trading back here, right? Additionally, okay, this is if you look at this, I would snap a picture and you label this range extension, but it's within range. And what I mean by this is open drive higher. It ended up being a failed range extension, right? We came back, we broke the low of the day, we recouped the low of the day, and pretty much closed there, okay? What does that mean? If we look at the volume profile really quickly, that is the wrong profile, that is NQ. So let's look at ES really fast, okay? It was range extension, but within the range. We're just balancing, guys, and this is what's killing people right now. We're balancing. Look, we've created a zone. All the closes, in this particular case, in this area, have all been below 1878 3/4. Everything above has been rejected, okay? Now, if tomorrow morning we gap up to the top of this range and drive higher, we know that we're breaking out. But basically, until you see us close above this 1878 3/4, right? And now the flip side of that coin is closing below, at least for now, this 1860 area, and really even getting down to this 1854. It needs to close below specifically this 1863 area, okay? Until then, we are just balancing in a very tight range. And the fact of the matter is, you can make all the arguments for what you know about technical analysis one way or the other. Until we get out of this little tight range that we're in, okay, and we've only had one exception. Look how many days we spent here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days, okay? We're simply building pressure in all of this, okay, for an extended move. And we just had head fakes either way. I don't know what's going to break this, but I do know as long as we're above 1880, there's a possibility of a move higher. And if we can get below 1863, 1860 area, there's a possibility for a move lower. I still think this 1840 is begging to get tested, but who knows, okay? We're just stuck in a very tight, choppy range, okay? And you cannot get flustered when that occurs. If you get flustered, okay, you're going to start making trading errors. The one last piece I want to leave you with, and I don't know if I've gone on too long, I certainly hope this has been helpful to people, right, is this. When I look at all my trades over years and years and years, okay, the majority, the gross majority of my money has been made by 10:30 a.m. Gross majority. A couple of times it comes between 11 and 11:30, but it's rare. Okay. The reason why I say that, every trading psychologist that I've spoken with, every other trading coach that I know, the majority of their clients make money in the morning, right, and then they lose money in the afternoon. My solution for addressing that in my own trading has been to focus my highest volumes and focus on my best trades in this period of time. After 10:30 a.m., I cut my trade size, and I try not to trade at all. And I'm pretty close to making the decision to focusing my coaching in the afternoon hours to almost completely withdraw from trading in the afternoon altogether. And I'll tell you the reason for this. There's another guy that I respect tremendously, Trader Smarts, Tony, very smart guy, right? It's just easier in this time frame. It's less stress. The results are better. Even when I went back and looked on days when I lost money in the first 2 hours of the day, if I just stopped, okay, and if I just stopped at that point and I looked relative to where I ended up at the end of the day between commission dollars spent and money made or not made, right, I would actually have had a significantly higher return last year if I simply dropped it after 10:30 in the morning wherever I was. Okay, whether it was just up a little bit, up a lot. For the few times that I did save it, or I had big home runs at the end of the day, it didn't compensate really when you look at the numbers for the amount of time, energy, and stress that I put into the deal. Okay, so that's something to think about, and I am considering now how I want to handle that in terms of whether I want to reduce my activity or cease my activity in the afternoon and instead focus on helping people become better traders. And that's kind of where my focus is right now, and I'm really enjoying it. So anyways, my name is Simon. I hope this was helpful, right? Focus on this area, guys. If you're having trouble making money, focus on this area. This is where the easy stuff is. When you know it's a Fed day, non-farm payroll, Federal Reserve minutes being released, 3 days plus maybe you want to throw in option expiration if it's a quad witching, right? 4 days out of the month where it's difficult. Everything else is pretty much out there for you to cherry pick, okay? And the rotations, you'll notice the rotations after she has finished speaking, after we've gotten past these moments, right, have actually been pretty decent all the way through. You'll notice on the way back down here, right, we get to this, here I've got the wrong date up here real quick, so I want to flip this over. But this is actually a good example. You'll notice after she was done or after she had started speaking, right, we get in here, we get a rotation down both from the front and from the back, right? If you look on the way down, first time into the zone, and I want to be clear with this, first time into the zone, rotation up for 2 points. You got paid. First time into this area right here, this 1868, it's a single point, right? We got responsive buys from 1868 all the way up to 1871. It's a 3-point rotation here, right? In addition, there were traps. I'm going to start highlighting the traps, I think, and sending them out to my coaching clients individually, and then when the room goes to a paid-for basis, I will send them out to whoever's members in there, but the trap trades set up as well. The last piece that I want to leave you with is that it's not just the trades. You've got to have a written trade plan that you're willing to adhere to day in, day out, and the only way that a trade plan works is if, particularly in my case, if you're willing to forego all your mediocre trades and only take your best trades, that's the easiest way to make money. So it seems to be the biggest challenge for most of the people that I coach, right? But once they get it, once they get to the point where they are leaving their crap 50-50, 55-45 trades out of the mix, and they're only focusing on their highest odds, they go through a period of being bored, a little frustrated, but once they get through that, they're like, holy crap, if I just focus on the good stuff and I increase my trade size, the money comes, relatively speaking, easy, right? It's just getting rid of your bad trades is all this is about. You probably already, every trader out there knows how to make money when the market's easy. The problem is avoiding losing it back when it's hard, and that's where the work comes in. So, anyways, my name is Simon. I'm with Trade and Perform Coaching. I hope this is helping a couple guys out there. I am not trading tomorrow. I will have the trade plan up, but I kind of enjoyed not trading today, and I think I will take another day of that and just kind of take it easy, and we'll go from there. So 7:45 a.m. Central Time, I will have the live market preview, and I hope everyone's having a great day today, and we'll see you in the morning.